JP Morgan, if they do an FX trade with Goldman Sachs, they don't say, hey, show me the money before we do a trade. Goldman Sachs isn't pre-funding across 30 different exchanges. They trade, and it's based on, historical reputation, reputational damage, all sorts of things, legal frameworks. That's another thing I think that's really lacking in the crypto space is that legal framework. What happens in a default? What happens if a trade is so far off market where it doesn't have any sort of real economic purpose to exist? I made an error. What happens next?
What's up, everyone, and welcome back to another episode of the Market Run-Up. I'm your host, Erin Gambrel, but you guys know me as the Blonde Broker. Today's special guest for this episode is Chris Soriano. He is the co-founder and CCO of Bridgeport. Let's welcome him to the stage. All right, let's kick it off with some basketball, because I know that is the big thing this week. And from what I understand, you're a Knicks fan.
I have to say, I know you're down in Texas, and I'm up here in New York, so I figured there's a natural friction there right now. But certainly living in Manhattan and the Knicks right now, they haven't won in like 53 years or something. So I think it's the hysteria in the city right now is out of control.
Yeah, and I might get a lot of hate for this. I'm really happy that a Texas team, right, is playing in the finals, or in the championship. But I just did not want OKC to go again. Like I wanted a new team, so I'm really happy it's the Knicks, if anything.
Well, let's see. The Knicks have been like, it's everybody either hates them or loves them. So we'll have to. There's a lot of anxiety in this city right now. I can promise you that.
Yeah. We'll have to keep up after each game with each other and talk about it for sure. All right, let's get into this episode. I want to talk about the big structure shift that we've been seeing. Crypto spent years focused on tokens and speculation, but it really feels like conversation is finally shifting towards that market structure and institutional infrastructure. Are we entering the phase where infrastructure matters more than some of these narratives that we've been saying?
Yeah, look, I think that's a really interesting start there, right? Because look, I think ultimately what's going to really be that next wave of investment that comes into the market. It's not a technology issue. It's not I don't think the latest token. It's nothing like that. Really, it's going to be the rails that are really driving that infrastructure, like the rails that are driving institutional adoption. And what I mean by that is really allowing for trading firms to be able to trade with interoperability and in a way that allows for them not to have to pre-fund on exchanges, right? And that's what's kind of happening in today's market. What you have is a bunch of kind of siloed ecosystems for the institutional market that have been created through custodial silos, right? So you'll have, like, for example, one custodian that'll connect into several different exchanges. And then you'll have another custodian that'll do the same. They're all kind of running the same playbook. And what you've created is you've just created various siloed ecosystems. And what Bridgeport really does is connects those disparate networks, right? So we are not an exchange. And just to be clear, Bridgeport is not an exchange. We're not a custodian. We are the messaging layer between those stakeholders. So if I'm a large trading firm, I can keep my asset with my custodian or custodians of choice and trade on any exchange without having to pre-fund and settle at my desired custodian facility. And that's really, I think I think that's really a big thing. But I think if you dig underneath, and sorry, Erin, to kind of drag on here, but if you dig underneath a little bit of why this happened, right, is crypto was built from that native internet crowd, right? It was built on retail rails where there was very little institutional involvement, and now we see the institutions coming in and expecting a different setup, right? And most asset classes, foreign exchange, fixed income, equities, it starts out institutional, and then the retail segment piles on after that.
Yeah.
So that's what we've seen different here. Apologies.
Well, you mentioned pre-funding. Why has that been such an inefficiency in crypto markets?
Yeah, well, like what I was saying, right? So right now, what you have is you have a lot of these major exchanges that are they're execution venues, they're custodians, they're lenders. They're when I as if you ask somebody from outside of crypto, but that maybe has owned some crypto, has some understanding of ownership of the asset, what they'll probably say to you is, hey, I buy, Bitcoin. To me, it's kind of like I trade a retail equity, right? I pre-fund on an exchange, and they give me some margin, and if I make money, in a couple days I can get it back, or in a day I can get it back. And if I lose money, I either get margin called or I get liquidated, right? And that's very retail equities driven, and that's fine. But when you get into that institutional space, institutions don't trade on pre-funding. They trade on credit. And I think that's really what's been missing in the crypto markets.
One thing that you've talked about is how institutions still have billions sitting fragmented across exchanges just to manage that counterparty risk. How much dead capital do you think exists in crypto today because of the current market structure?
Yeah, look, yes, I've seen articles, I've read articles. I think we published one. I think it was something in the range of $60 billion or more that is just basically sitting in dead capital across, 100 different exchanges, right? And the reality is, I understand how it's been created and why, and that's all well and good, but the way markets scale is not with dead capital sitting idle on exchanges, not earning any yield or interest. It's when these large trading firms can unleash their capital. That's when you start to see the real growth in the markets.
So we want that capital to become more efficient through systems like these off exchange settlements.
Absolutely, absolutely. Look, off exchange settlement is not a nice to have, right? And
Yeah.
and, and but I think there is a lot of the current. You have to look. If you look at a big exchange, pre-funding is a business model, right? That's they earn a lot of revenue and yield by those assets being on those exchanges. And I think, like I said, from the retail side of things, which is probably the lion's share of a lot of these big exchanges, that doesn't change, right? I pre-fund on exchanges because I own crypto, and I understand that makes sense. But for a big asset manager or a bank, or as these larger institutions, they trade on credit. If you look at the foreign exchange markets, which I really feel is a very good analogy when looking at the institutional side of crypto. Like I said, I think the retail side of crypto looks a lot more like retail equities. But on the institutional side, they don't, JP Morgan, if they do an FX trade with Goldman Sachs, they don't say, hey, show me the money before we do a trade. Goldman Sachs isn't pre-funding across 30 different exchanges. They trade, and it's based on, historical reputation, historic reputational damage, all sorts of things, legal frameworks. That's another thing I think that's really lacking in the crypto space, is that legal framework. What happens in a default? What happens if a trade is so far off market, doesn't have any sort of real economic purpose to exist? I made an error. What happens next? In most traditional markets, there are rules in place that govern these types of things, right? And that's institutional mindset, right? It's not like it's not win at all costs. It's really kind of win, you know, in the right way, right? And to do the right things that help a market to scale and breathe, not so much around, Wild West tactics.
I think that's kind of like the perfect segue into, we're talking about legal systems and rules when it comes to these, I would say oopsies, but like if we could talk about maybe post FTX institutional psychology, right? Like post FTX, and this was a few years ago, institutions have become obsessed with counterparty risk, custody, transparency. How fundamentally did FTX change the way that institutions approach crypto trading infrastructure?
It's a really well put, that question. Look, I think personally, I think I think a lot of the industry in general has very short memories. I think that they're not, look, most, especially on the trading firms, they don't go to sleep at night thinking about how to solve the problems, right? I think, I know when I didn't even look at Bitcoin today, but I know because I've had, I don't know how many trading firms today, at least 4 or 5 this morning, come in and ask me some questions, right? Inbound stuff. And then I just assumed Bitcoin must be down today, right? Because when Bitcoin goes down, we
It's
tend to
down.
see a lot more inbound, right? And when Bitcoin goes up, nobody's worried about the risks. And I think,
Right.
I don't want to root for anything. I'm certainly not, that I'm not doing that because it doesn't really ultimately help. But I think most people feel there's going to be something like the next FTX in the future, and then it'll be a big issue for 6 months or 8 months, and then we'll see. We'll see. I think I don't have a crystal ball, but I definitely think that a lot of these firms have short memories because if you really look at it, I don't know what's fundamentally changed.
Yeah. I mean, there's already like talks of FTX 2.0, right? We've seen that in the headlines, and I mean that it already kind of exists. Like some
Well,
companies operating very similarly.
no, you got it, right? Like when you have that much concentrated risk in one place, and that's
Yeah.
what TradFi doesn't have, where, it's like the Swiss Army knife approach, I like to call it. You know, how, you know, you have everything being bundled into one. And that's fine, like I said, on the retail side. But, if you look at the major exchanges, you know, you can't just mix, and they're all looking to acquire institutional liquidity. But you can't just mix institutional liquidity with retail liquidity. Then you have just two bad liquidity pools, really, is what you end up
Yeah.
with, right? So, mostly in foreign exchange and things of that nature. And like I said, you really need that. First thing you need that underlying credit to be in place, right? And I think that's where the market, that's going to be like oxygen for the market. Right now, you don't have any real prime brokers in the sense that, balance sheet prime brokerage, right? You have lenders out there doing some of the kind of the credit intermediation, but nobody is out there absolving the credit risk that comes with, what that comes with a balance sheet, right? If you get real, like you get somebody like a Standard Charter or a JP Morgan or
Mhm.
Goldman offering real balance sheet for trading firms, that's going to be like oxygen to the ecosystem.
You also mentioned FX markets, and I want to touch on that shift towards like OTC and bilateral markets.
Mm-hmm.
You wrote that crypto is following a very similar evolution to FX markets, moving from centralized books toward OTC and these bilateral trading relationships.
Yeah.
Why is it that crypto is starting to resemble FX market structure?
Yeah, look, I think what happens in most markets, right? What'll happen is, and like I said to you, crypto was built in like what we like to call bizarro world, right? It was built on retail rails, right? But what
Yeah.
happens in FX, right, is that you, primary venues are created, and those venues become the golden source of price discovery. Okay, so for example, in FX, you had the primary venues were EBS, which is a big primary FX venue, where wholesale, where banks and high frequency trading firms and asset managers went to, or hedge funds, sorry, went to hedge risk. And Reuters was another one at the time. Now I think LCH, but the point is they had, and then the data from those sources became a source of pricing their clients. I'm just trying to like make sure, I don't want to get too technical into it, just to make sure people understand. So now I'm
Yeah.
using that data to price my clients. So banks, what ended up happening is as these really nimble high frequency trading firms came into these primary venues through prime brokers, the banks became basically takers on these platforms, right? Because they weren't that fast. They had real orders to execute, while you had other
Mhm.
guys going in and just kind of trying to capitalize on a price between this venue, that venue, and the other venues, right? So these banks basically took a step back and said, wait a second here. I have I have the data. I have all these clients. Why am I sending them away to trade on another place when I can say, hey, you know what?
Yeah.
Erin's a really good client. I'm going to quote her very, very tight prices. But this other person over here is not as good. I'm going to quote them quite a little bit wider prices. And then this guy over here is terrible. I don't want to quote them at all, or I'm going to quote them really, really wide prices. I think the point is, and I'll finish here, nobody opens up a store to give away money. That's not a business model, right? So I as a price mate, as a bank or a big institution, I price clients. I don't price competitors, right? And that's kind of how you're going to see the market evolve from like kind of that centralized exchange type thing to where it's really more OTC bilateral trading, and that's how they all evolve.
Okay, I like that. I mean, I know you mentioned you don't have a crystal ball, but it is interesting to kind of predict and see or think where we think institutional crypto goes within the next 5 years.
Yeah.
And I have another question because you mentioned Bretton Woods. Bretton Woods. Who is Bretton Woods?
Bretton Woods. Okay, no, my God, this is before my time. So
I was like,
I
who's
have to
Bretton
get
Woods?
some. No, Bretton Woods is basically that happened a while ago, but it was really when they took the U.S. off the gold standard, right? And they allowed, so the U.S. dollar. Sorry, the U.S. dollar was basically pegged to the gold, right? And then they removed they removed that model, and then it became a freely floated currency. But this is going back many years. I don't know. You must have read this in an old post from me, but yeah, that's so the Bretton Woods. I mean, but this is the kind of stuff that we're, there's a lot of currency pairs out there today that are not, an FX piece, right? That, for example, are not convertible, right? You can't just go, like, I can go and buy euro dollar in South Africa at 12 o'clock at night, right? But you can't go and buy. It's much more difficult to go try and figure out how to buy Taiwan dollar, right? Taiwan dollar is
Yeah.
not a freely floated currency pair. So I think there's all these kind of, even things that stable coins can help and will eventually kind of help, like how does somebody get paid, for example, in Korea and say USDC, and now they have to convert that over to their currency. I mean, those merchants are paying very, very wide spreads. So there's definitely opportunities, in there, and I think I think those are really, I think that's how the market's kind of moving, right?
Yeah, I think it was just a fascinating way to frame it that like stablecoins and crypto are having that moment, that Bretton Woods moment, because you do want to see like stablecoins becoming a foundation maybe for a new financial architecture. So it's very intriguing. And another thing that you touched on, you worked around traditional markets for years.
Yep.
So when you compare traditional finance rails to these on-chain rails today, where is TradFi clearly superior?
That's okay. I think one of that's the good news is none of these questions are scripted at home, folks. So yeah. So look, where is TradFi? I think the main thing in my mind, right, is that there's all these like it's not technology, right? Don't get me wrong. TradFi has that infrastructure in place, right? And the infrastructure, I think there's a few places though to answer your question specifically. Is that one? I get a feeling sometimes when I see and listen and hear people talk at various panels and conferences and what have you. Like, I think the first thing is crypto. Like people, like in TradFi, people assume trust, right? And in crypto, people assume the opposite of trust, right? And I think that needs to change, right? That's where and I think infrastructure like Bridgeport is putting in that says, hey, I am a big institution. I have assets locked up on your exchange. You have access to these assets, and then you kind of manage that state management, okay, of okay, the assets are in pending state, they're in lock state, they're in unlocked state, right? Then and that's how, but assets should not be there should be the ideal situation here is that assets are secured and fungible. Well, I should not have to sacrifice. And that's one of the things in crypto you do, and in TradFi you don't.
I guess my next question, in like an adverse world then, or reverse scenario, where does crypto already outperform traditional finance then?
Well, look, I think, it's actually in some ways, right? It's been leading, like, right? So 24/7, right? That's kind of like something that's really kind of spawned from the stable coin, the traditional, from the digital asset side of things. Personally, I think 24/7 trading is, I think it's great marketing and it sounds great on paper, but I really don't. Is there value? Look, there may be, but I can tell you this, right? I lived in Asia for 13 years, running the largest
I'm
FX
jealous.
platform in the world, right? And FX is 100x bigger minimum. Maybe even 1,000. Maybe it's even 100. It's way bigger, right? The FX markets are $10 trillion a day, right? I was running a piece of the largest FX venue in Asia, right? And on Tuesday morning, when we basically, that platform owned Eurodollar, which was the biggest traded pair out there, and it's still probably the biggest traded pair out there. And there wasn't that much liquidity on a Tuesday at 8 a.m. in Singapore so I'm trying to understand what's happening on Saturday evening, what kind of spreads you're going to be seeing on Saturday evening in ETH on Saturday evening U.S. time, for example, in ETH. Look, like I said, there could be value there. And maybe it'll evolve into that, but it seems like a lot of marketing right now to me.
Do you miss that like schedule that you were on when you were in Singapore?
You mean
Because you're working Saturdays, right? The
well,
weekends?
not really. No, not really Saturdays, but look, definitely Friday nights. Friday night. The problem is that we were kind of we're the satellite office. So whatever time now, it's funny. I'm in a startup, right, and I have calls with Asia, and I do those times. So I kind of I made a bad trade both ways. So I'm always on night calls, no matter what. I've been doing that for a long time. But yeah, so I think that's really the thing, right? You're not going to see. I don't think you're going to see real volumes happening 24/7. That's the thing. 24/7 during the 24/5 for sure. The extra 2 days, maybe, but I don't see it.
Well, I know we're kind of short on time,
Sure.
so I've got one more question for you. When people look back 10 years from now at this phase of crypto market evolution, what role do you want Bridgeport to have played in building the next financial system?
I have to say, as you were kind of going through that question, I was already kind of envisioning what you were going to, and I think that the most important thing for me and I think our company is that we've made a difference in helping the institutional crypto market. We know that to scale, to become secure, to become a bigger piece of the entire kind of financial ecosystem, and I am super confident that what we're building is going to be table stakes as more and more investment comes into this industry. Like I said to you, big firms, RIAs, regulated firms, not only don't pre-fund, they can't. Up to a threshold, they can't pre-fund. And even if they could, they don't want to, right? So, those are the things that, we're really confident in what we're building, and we're going to make a difference. And that's really the most important thing.
Amazing. And then, you knew this was coming. My big legacy question, what is the legacy that you would like to leave behind on this earth?
Oh, legacy I'd like to leave behind on this earth. Look, I want to be I think the most important thing for me personally is that I am somebody who, when it comes to what I'm working on and what I do in my life, whether it's here, whether it's outside of here, is that, I do the things and as a company and as individual, do the things that we say we're going to do, and then do them really, really well. Right. And that's really, really the most important thing, right? You can't, if you do those things, all the other stuff takes care of itself.
No, I love that. That was beautiful. Well, thank you for your time on the show. I really appreciated having you on this episode of the Market Run Up. Let's do it again.
Yeah, definitely. I think the last time we in that consensus in Miami, I think I was looking a lot more raggedy. I think I was out like a few nights. I had a beard. See, I'm much more clean, fresh.
Yeah, this is perfect. You know what? We're gonna end up having to do a few more down the road, and who knows what we're gonna look like then.
Awesome.
But
let me know if you get up
as
to New
always.
York.
Yeah, it's a pleasure having you on. So let's definitely stay connected and go Knicks/Spurs.
No, not slash. Just the Knicks part. Come on, you guys have already won. We've never won.
Just the Knicks.
Oh,
all right.
man.
Well,
Take
thank
care.
you again so much. All right, everyone. That is a wrap for this episode of the Market Run Up. Please go ahead and give us a like, follow, subscribe, and get ready for next week's episode. I'm so excited for you to join us. See you all then.